Hello and welcome to the weekly technical analysis outlook, this time for the week starting 18th of December 2023. My name is Marcello Kolex and I'll be your guide through the markets. I am also the managing director at Clever Markets, so if you ever have any questions regarding technical analysis or if you want to learn more about what we are doing, then do get in touch with me on LinkedIn or go to our homepage on www.clevermarkets.com and have a look around what we're actually doing. So today we are going to have a look at the TTF first. And looking at the weekly chart, it's quite interesting. So we are bearish. Why are we bearish? Because we have closed below the ascending channel now for 3 weeks. So we turned bearish quite some time ago. And also we see that the 8 and 12 exponential moving average have crossed lower, and we also see that in the more medium term, the MACD has crossed back below the zero line, so that's overall bearish. Volume is also strong, so there's no signs of any bearish weakness, and I do expect the market to drop towards 30.5 in the coming weeks. Well, this could be an important support level, so maybe there's a little bit of a bounce before we continue lower. Remember, a little bit of a correction is normal in any healthy market. But what is happening on the daily chart? So of course we are not trading on the weekly chart. We are trading possibly on the daily and lower charts. So here we see that we are within the descending channel. We've been in it for quite some time and we ended the week with a hammer. So a hammer at an important support level usually means gains, at least for 2 or 3 candles. But we do always need confirmation, and that confirmation came in the form of a stochastic. We get a bullish signal here, and what we need now essentially is a close above the hammer, which in our case is 34.76. That would then trigger possibly 2 or 3 green candles. Ultimately, the first area of resistance is 36.69, and here's then where we will the market has to make a decision. Either this is just a blip and we continue to scrape along the lower end of the channel, or we close above it and then make it all the way to the upper channel boundary, which is also this old resistance level here near 40.67. So whatever happens, topping out here or topping out here, the idea thereafter is still for the market to move lower. Why do we believe that? Well, because the MACD overall is still pointing lower, as are the 8 and 12 exponential moving averages, and we are still within the channel. So whatever is happening now is probably just an upside correction, and then we'll move lower again. We'll get our first hints on the daily chart, on the 15-minute chart, and here we see, we did end the week with 2 strong green candles, bullish crossover on the 8 and 12 exponential moving average. The MACD is pushing higher as well, and the stochastic is also pushing higher. It's really strong volume, above average volume. So ultimately the idea is not just to move above an so by the way, there's an intraday channel. This is not the daily channel, The idea is for us to move above 34.36, which is the intraday descending channel, and then make it all the way higher, which would then, on the daily chart, possibly kickstart this correction. And that is all for the TTF.
Before we move over to the next contract, I have a little favor to ask. If you find any of this useful, then please consider sharing it with your colleagues if you think they would get something out of it as well. Would really mean a lot to me. I'm just trying to spread some knowledge here, and if you want to learn more, go to clevermarkets.com. Alright, now let's go on with the contracts.
Let's now have a look at European carbon emission certificates. So we see that on the weekly chart we have accelerated the downtrend, so even though we were already bearish, it's going even lower now. So let's have a look at what the market is actually doing. Last week, we did form almost like a textbook spinning top, which means like a small body and reasonably long wicks that are equally sized. This simply means hesitation. The market is thinking, but it doesn't mean bullishness. It truly just means the bears are taking a breather. And of course they should. Can you see, right? We are accelerating the downtrend. even more than it already has been. And the volume is like above average, it's like pretty high. And there is no tools that indicate any sort of bullishness. So we see that the stochastic is still pointing lower. So this would indicate any sort of like short-term correction higher. And also in the midterm, we see that the moving averages like trend and momentum tools are all still fairly bearish. So I believe that we could very easily make it below, well, what is this, 66, and simply continue the downtrend towards at least maybe 60. If we were to experience a little bit of a retracement higher, I don't believe it, but if we were, then we would probably find resistance in like the 72 area or wherever we find the channel pullback resistance when it happens. So what does that look like on the tradable daily chart? Well, here we see that, yeah, we did push below the channel quite some time ago, still bearish, and ultimately possibly a little bit sideways within 66 and 70, possibly a little bit sideways before continuing lower. We see that we had this like little green candle, but this candle doesn't really mean anything. And we also see that the stochastic is already crossing bearish, even though we are in neutral territory. And you can see, let me get this again. This has happened like quite a few times before in the past couple of weeks. And each time, where is it? There you go. The market simply continued lower again when this happened. Yeah, here, lower, here, a little bit lower. Of course, just looking at 2 or 3 of these doesn't really mean much, but overall, it does show that the bulls are already exhausted without even having moved into any sort of like overbought, oversold levels. So we are possibly heading lower ultimately. One thing that I just want to point out is that the MACD started to move sideways. So this is a first indication of bearish exhaustion, but it is nothing to trade on. So the bears are possibly continuing below 66. That is likely, but let's keep an eye on the MACD because it does look like the bears are slowly running out of steam as well. Okay, let's have a look at the intraday chart. We're looking at the 15-minute chart. So here we see that we ended the week with 3 white soldiers. 3 white soldiers simply means that we have 3 green candles and they each open within the candle body of the previous candle, here just marginally. But ultimately, this means bullishness. And we didn't get any sort of bearish signal on the stochastic or anything like that. MACD is still pointing higher. We got a bullish signal on the MACD, on the EMAs. So a lot can happen over the weekend, and bullish enthusiasm can wane. But for now, with information available to us, we could make it above the 61.8% FIB at 67.89. What is this level here? What does this even mean? Well, we are retracing this down leg here. We're trying to cross above it. Usually corrections only go to the 61.8% FIB, so that's just the maximum usually. But in this case, it seems that we could push higher. This seems very likely with the tools available to us right now. So yeah, we could undo the entire trend essentially before we find resistance, maybe here or maybe even a little bit earlier. That will be determined when it actually happens. So you can see what that would mean. Even if we get this push higher on the 15-minute chart, we see that on the hourly chart, let's give this a second, we are still overall moving lower. So on the daily chart, that possibly means that we might get a little bit higher, but ultimately the downtrend is still maintained. So this is why I believe we are going to move a little bit sideways before we push lower again. So that is it. Essentially on the 15-minute chart, we might see a little bit of a strong open this morning, but ultimately the idea is for the market to still push sideways and then lower on all 3 time frames. I want to spend a little bit more time on the Henry Hub today because there's a lot of like textbook candle patterns and technical analysis theories happening all over the place. So I want to start with the weekly chart, where we have a hammer that usually hammers out the bottom, and the idea is for the market to move higher. But bullishness would only be activated above the peak of the hammer, which here is 2.544. And can you see this level also somewhat aligns with the 23.6% FIB retracement? We're trying to retrace this downtrend here, and we want to see how high it can go. We also get a bullish signal on the stochastic. So with a %K, the orange line, pushing above %D, the white line, in oversold territory, so below the white line. So there's a bullish signal. So we have the candle, we have a confirming bullish signal. We want to see a cross above this trigger line, and then we could make our way higher towards possibly the 50% retracement, which somewhat aligns with the channel pullback resistance. So overall, pretty bullish. But why do I think that the market ultimately will still head lower? Well, that's because we do have bearish signals on the shorter term moving averages 8 and 12, and also on the MACD itself. So that's why the idea is somewhat of a retracement before it goes lower again. But this is just a weekly chart. We are actually trading on the daily chart and the lower level charts. So what is happening here? So we see that also here we had at the end of last week, like almost 3 white soldiers, where the 3 consecutive green candles opening within the body of the preceding candle. I mean, this here is a little bit questionable. Okay, get it. Here, that's a bit more easy. We did get a bullish signal on the stochastic. So actually, we're thinking about bullishness here already, or at least a retracement. And we are also at the 23.6% FIB retracement. So we want to break above it in order to make it all the way possibly up here. Here's the alternative, however. If this level of resistance holds, then we are possibly moving within a sideways range here between 2.235 and 2.48. So this also seems very likely, and there is not really a preferred case here at the moment. I really want to see what is happening, but yeah, keep an eye on this, because we could actually move higher and then lower again. Lower because of the MACD, yeah, and because of the still bearish exponential moving averages. But if this level holds, don't turn bearish or don't stay bearish immediately. It probably would have gotten out here anyway, and if you're on the short side. But there is a chance for us to move a little bit sideways now. And we're having a look now on the 15-minute chart, and we can see that, yeah, okay, we do have a swing of higher highs and higher lows. And for now, the stochastic is kind of still bullish. So the idea for us is to break above 2.474 this morning and then make it all the way up here again. If that level holds and we break below 2.458, then we could make it all the way down here. But can you see, no matter what happens, so the preferred direction is bullish continuation, but no matter what, and that would also then mean, so a break above this area would then help us above the 23.6, and we would make it much higher. So that's why it's so important to look at the intraday chart, because this will be a first indication of the deeper or the more extended upside correction. If the level holds and we push lower instead, then possibly we'll get a little bit of a sideways market. So that's why it's so important to look at the intraday market of what's happening this morning. That will then help us getting a direction for the week. And that's why, so the Henry Hub today, very exciting, or this week, yeah, we have candle patterns explained with the 3 white soldiers and with the hammer. We do have FIBs explained and how they're important. We are talking about like pullback resistances. We are talking about multi-time frame analysis starting in the intraday chart. So that's why today I wanted to talk a little bit more about the Henry Hub.
And that's it for this week's Outlook. If you found it useful, then please consider sharing it with your network. My name is still Marcello Kolax. You can find me on LinkedIn. I am very active there. Every single day I post my thoughts on the European energy markets there. So do give me a follow, connect with me, and check out what else we have to offer at clevermarkets.com. Thank you very much and see you around.